Good afternoon, everyone, and welcome to Venture Forge's latest webinar, where we're going to take you through a bit of a story as to how you can start to get some cash back from Amazon. I think our team have very nicely marketed this as how to get 150 grand back from Amazon. And what we'll take you through today is an example of how that can happen, but I'll also talk to you about how we've actually done exactly that for one of our clients today. As a very quick introduction, we're VentureForge. We're a Amazon marketing agency that helps brands gain commercial clarity and success on the Amazon platform. I'll tell you a little bit more about us in a second when we get started. But before we do, can I just introduce you to two of our guests that have joined us today for the webinar. We've got Matt from VentureForge and I've got Ant from Vendor Rocket. Guys, maybe you, Matt, first. Could you just give a quick hello and introduction to yourself?
Yeah, no worries. I'm Matt Briggs. I'm from VentureForge. I'm a senior Amazon account manager. I've been working with Amazon Vendor for the past 6 years. 4 of those years were at a distributor, so I was very close to the operational processes. I've also got experience working with Amazon Vendor from manufacturer side and agency now. So I've been in the Amazon game, now 6 years.
Fantastic, Matt. Thank you. And over to you, Ant. You should be very good at this by now.
I'll just I'll reel it off. Hi everyone, my name's Ant. I'm an Amazon consultant and CEO of Vendor Rocket. I've been in the Amazon game or in and around Amazon for about 14 years, both branded side, agency side, and now as an independent consultant. Specialise in vendor, but also cover seller as well across multiple categories.
Fantastic. Thank you very much, Ant. And for those that have joined us before, you'll probably see something a bit unusual today. We have a presentation on the screen, and that's not really our usual flow of things. We normally do morning webinars where it's 3 or 4 people around a table having a conversation around a topic. But for today's conversation, it felt a bit more appropriate. There's a bit more detail to get into, some examples to bring to life. And if it's not downloadable, please just drop us a line if you'd like a copy of this presentation, and we'll send this out to you afterwards as well, so you've got it as a point of reference. So here's what we're going to take you through today. We're going to give you a bit of background as to why would Amazon have your cash, a bit of background to the conversation that we'll take you through today. And take you through some real specifics on why Amazon might have cash from your business that is due back to you. Then we'll take you on to talk about how do you make it stop. Most importantly, how do you stop cash leaking back to Amazon? And then take you through how can you get your money back. We'll then open up to a Q&A. I suspect this conversation could open up quite a few questions from you in the audience. If you have a look to the bottom right-hand side of the screen, you should see a little questions icon. Please fire your questions in there as we're talking, and we'll get to those at the end and give as much time to that as we can do. And then finally, following that, we've got a quick offer that we'd like to put to you for joining us today, but all will be revealed at the end. Final bit of intro to VentureForge. The left-hand side says very, very clearly what we do as a business. We help Amazon brands, be it vendors or sellers, get commercial clarity and get success on the Amazon platform. We do it typically for some really well-recognized, really significant brands, and we also have some fantastic startup and challenge brands in our portfolio, but we work across a broad spectrum of industries and a broad spectrum of territories for Amazon, from working with brands like Kodak on seller in the UK and Germany, to people like Crafters Companion, where we're running their vendor and seller business across the UK and the USA. I don't want today to be a full sales pitch for VentureForge. It's here to help share knowledge and help you, the audience, learn from us. So without further ado, let's move on. And maybe Matt, would you like to take this on and give us a bit of background as to where is money leaking on Amazon, and maybe kick the conversation off for us?
Yeah, thanks, Andy. So over the next few slides, I'll provide a bit of context about the size of the problem, and I'll also define what some of those revenue leaks are and what they actually mean. So some shocking statistics to get started. And this even surprised me when I was looking into it in a bit more detail. It's estimated that up to 5% of total sales into Amazon are lost due to shortages, chargebacks, and overbillings. So to put that into monetary value, that's £200,000 you're losing against a £4 million business. So it's a lot of money over the course of a year, and that cash could be used to support growth on Amazon by investing in ads and deals, but actually it's just going to operational inefficiencies. There's over 100 plus types of chargebacks, overbillings, and deductions on Amazon. It'll be no surprise to anyone who's worked with Amazon Vendor that it's really, really complex, and there's loads of different things that are ever changing, and it's really, really complicated at times. The process of actually challenging Amazon and trying to get some of your money back is extremely time consuming, quite manual, and requires information from loads of different parts of Amazon, and collating that all together is a task in itself sometimes. Most finance teams will know that the scale and complexity of recouping lost revenues is actually really, really difficult on Amazon and really time consuming. More ASINs, more problems. So naturally on Amazon, you want to add to your selection, you want to move into new categories, new markets. And every time you do this, your ASIN count duplicates and multiplies, which even though it drives more sales, can create more problems and is even harder to track particular ASIN level. So yeah, more ASINs dilutes focus and increase chance of errors when reconciling data. It requires more time just because there's more volume. When you're looking through data, you've got to really interrogate it and analyze things at line and PO level, which is extremely time consuming. And if you're doing this across 5 countries, you've got 5 times the work. So that can easily lead to a very overwhelmed finance team who really don't like dealing with Amazon, to be honest. And I'll just run through now and talk about the different types of revenue leakages, starting with shortages. So as a definition, a shortage occurs when there's a discrepancy between what you claimed you shipped to Amazon versus what Amazon have claimed to receive. So a real life example would be you ship 10 units of a product with 2 in a carton to 5 units each. Amazon go to book that stock in and only book 5 units in. So when you invoice Amazon for the 10 units, they claim to only got 5 and they'll only pay you for 5. You then have to dispute that and try and get the cash back. The next type of leakage is an overbilling. So overbillings refer to incorrect, duplicate, and redundant charges applied by Amazon, or instances where Amazon fail to fully release cash that they owe you. Some real life examples of these are overbilling on co-op terms. So they might have billed you against the wrong vendor code or the wrong percentage amount or the wrong amount of net receipts. Overbilling on promotions. So either short charging you or overcharging you for a promotion you've run, say on Black Friday, just general price discounts or any promotion type. And then sometimes they duplicate bills as well. So you'll get the same bill for the same agreement more than one time. And if you're not all over your reconciliation and your finance work, it sort of slips through the cracks. Finally, charging return freight and additional freight when they've actually got a prepaid freight agreement. So these are all examples of different overbillings. But as I said, there's like 100 plus different types. They're trying to keep track of all of them is really difficult. The final part of the profit leakage from an operational perspective are chargebacks. So essentially fines, everyone's favorite thing. Chargebacks are non-compliance penalties, basically where vendors violate operational process requirements from Amazon's side. Some key examples of this are PO on-time accuracy, mislabeling cartons, oversized cartons. And surprisingly, chargebacks actually exist to try and make Amazon's process more streamlined and efficient and essentially get the product to the customer as fast as possible. So they actually do have good intentions with the chargebacks, but it sometimes feels like you're just getting beaten up from all angles because you get charged for shipping stock into Amazon and for anything you essentially do. But the idea here is that by getting the chargeback, it triggers you to update your process to be more in tune with what Amazon want and what makes the whole sort of operational process more seamless. And yeah, it won't be a surprise to people on this webinar, I'm sure, but some vendors just accept chargebacks as a cost of doing business with Amazon and will either build it into the cost or accrue for it, but would really encourage vendors to try and understand why they're getting chargebacks and address some of those root causes to avoid them moving forward.
Thanks, Matt. I think that for me is the key with this. And something you said there is really quite telling. The number of brands that accept this as a cost of doing business and don't do anything about it. And we'll come on to talk later on about how you can do something about it. I know you've got some thoughts on that, Ant, but I'll also bring to life an example of what we've had with clients. These are fairly significant numbers. And when we often talk to clients about a couple of percent, but the more recent data you've got, Matt, suggesting 5% of turnover could be sat going back to Amazon is fairly significant. You can't run an Amazon business in this day and age where people are querying the net profit at the bottom without facing into this and trying to do something about it.
Yeah, and I think on that percentage piece, obviously it'll vary business to business based on what your operational process is and what the scale of the business is. But some businesses scale really fast on Amazon, and actually their operations and their back-end processes aren't aligned to that sort of sales growth, and they have big profit and revenue leakages in the background.
Yeah, it's fair point. We often see that over time it ebbs and flows as well. If a business goes through a sticky period, that might go up. If it goes through an efficient period, it might come down. Actually, Matt, probably quite a good time for me to pop a quick poll up on the screen. Actually, it'd be quite interesting to see from the people that we've got in the audience today, of which I recognise quite a few names, and I know we've got some vendors in there. I think Whitney should have a poll prepped in the background. Be keen to see what percentage of your revenue do you think you're losing at the moment to chargebacks. So if Whitney's there, can you pop the poll up for us, please, Whitney? Looks like we might be having a few tech issues. Yes, looks like we are. We're having tech issues, so we'll hold on the poll. We'll skip on, and maybe we'll come back to that later on if Whitney can drop me a nudge and let me know if there's a chance we can get that back up later on. So, Matt, thank you. You've explained kind of what is a chargeback or penalty or shortage. I think what's also important to understand is why does it happen? And I think you started to allude to a little bit of that, Matt, in that back part of that conversation. If this looks like I'm reading from slides, it's because I am. I'm just covering for somebody else who we were hoping to join us on the call today, but couldn't make it. So I am going to be reading from the slides pretty much here. But the reason why you get these, let's call it chargebacks in a broader sense from Amazon, is it's all about Amazon's process. If you think that Amazon is delivering 8 billion parcels globally every single year, to get 8 billion products out of the door, they've got to have had 8 billion products in the door. And those products are coming in from various vendors. Obviously, you've got sellers putting stock into the warehouses as well. But for Amazon to run an efficient and lean business in that way, they've got to have absolute efficiency and clarity all the way through that process. And coming back to the notes here that's been kind of left for me on the screen, Amazon have got no interest, and I think you said this, Matt, they've got no interest in levying those chargebacks. I might contradict that a little bit. I sense there might be quite a nice sort of profit line for Amazon here, that they are leveraging those chargebacks almost as a virtual clip around the ear to say, come on, guys, your process, the way you're sending products into us isn't seamless, it's not smooth, and it's not working the way we want it to work. And when that breaks down, Amazon becomes inefficient and it costs them money. So this is not Amazon. Again, I'll contradict that. Maybe it is Amazon trying to make a bit of an extra bit of cash on the way through. But fundamentally, the process exists to try and make sure that vendors are compliant when they send their products in, that they're compliant when they operate with Amazon, and that Amazon can run an efficient and lean business behind the scenes. And it's not just Amazon that operates this model. If you're a brand that's selling into Tesco, or you're selling into Argos or Sainsbury's or any of the big grocers, exactly the same happens there. I think it's just more understood and expected in those channels than it is on Amazon in particular. Most importantly, it's about fixing it. What types of issues cause Amazon to be inefficient? It's the things that are listed there. It's things like carton content accuracy, carton information compliance, missing delivery windows and no-shows. One of the best examples of this is one of my favorites is a client we're speaking to who could not understand why Amazon were hitting them with penalties because they delivered early. They never delivered late. They always delivered early. And that is as much a problem for Amazon and as much a reason to be penalised as delivering late. Amazon wants a delivery window, and so much so they've now implementing this on seller, where you're getting a delivery time frame on the seller model. They need to know when goods are arriving. Things like preparation issues, or simple things like you're issuing paper invoices, you're not EDI integrated into Amazon and just working the way that they want you to work. So although I've kind of garbled my way through that and tried to cover and kind of make that as articulate as I can do, Matt, you did a much better job of explaining what the penalties are. The reason behind it is very clear. Amazon want a brand to comply with their way of working because it makes Amazon's business easy, efficient, and streamlined. And that's what we're doing. If you don't follow their guidelines, you get that virtual clip around the ear and a penalty drops into your Amazon account. They're also doing it to make some cash. Let's be clear about it. There's definitely a profit line attached to this, but the less said about that, the better.
Yeah, I think an interesting point just to make on the back of that is a brand or at a vendor, it's important to understand that Amazon won't change its processes, and sometimes you'll get comments or you'll get people say, well, why can't Amazon do this differently? Why can't why can't they sort of work with us? Amazon are never going to change, so it's sort of having a really open mindset, adapting to work with Amazon rather than resisting them.
Absolutely. I think that's I suspect Ant might have something to say on that. I think it's you that had that conversation with me past about our Amazon going to flex to my business. It looks like our tech issues have been overcome. So if I could quickly pop the poll up that we were trying to do earlier, be really keen for anybody who's listening. What percentage of your total revenue do you think you're losing to Amazon through chargebacks, shortages, and overbillings? I'll leave that there for a few minutes. I'll be keen to see kind of where this lands based on what we see with our clients and the experience we've got. Very interesting. Okay, so far, we almost always find these polls when we do them are quite polarizing. I was expecting a 1% to 2% number. Actually, what's standing out is the number of people that don't know and haven't looked into this for their vendor business, and people that are estimating north of 3%, which is fairly significant amount of cash for a brand to be leaving on the table.
I think you could also raise a poll to say how far back do you look at your chargebacks to estimate that, because you hear horror stories of chargebacks going 2-3 years, shortages, and you just go, oh, that's a lot of money that is being left on the table. And absolutely, you're right. It's just sitting in Amazon's pocket. But I think I said to you up front a few months ago, actually, that it was the basics of an Amazon relationship is you give them a price, they buy the stock from you, you send them the stock, they then pay for it in full. If that doesn't happen, the relationship breaks down. It really should, because it's kind of the fundamentals of what the relationship is built on. So yeah, I feel quite passionate about shortages and chargebacks and holding your own business to account, but also Amazon to account for some of this stuff.
Yeah, absolutely, absolutely. Well, I think good job you're feeling passionate, because I think the next section is over to you. How do you prevent this kind of stuff from happening? Now we know what it is and why Amazon does it. How do you curtail it?
Yeah, absolutely. So preventing losses from happening. First of all, the devil's in the detail on all of this stuff. You really need to understand what you're putting into the Amazon machine in the back end. You need to understand your pricing, your selling unit of measure, your carton unit of measure, pallet unit of measure, product codes, barcodes, and also be mindful of any requirements from Amazon now, but also what's coming further downstream. Most issues regarding shortages or chargebacks can be linked back to when everything was set up initially. So make sure you're really going over that detail and check it routinely. You're probably familiar with, you can change something on Amazon and then 2 or 3 weeks later, it'll be slightly different. The data in the background does change depending on how your business is set up. So I would actually say that every 4 to 6 months, you should be going through checking alignment with all of these key points to make sure that you are keeping ahead of any potential issues. Because if you don't, they are going to come back and catch you up in terms of just massive shortages or chargebacks or issues that are just going through the account. So the devil is always going to be in the detail. It is painful. It is time consuming. But if you've got 100 grand that's leaking out the back door, actually, I'd challenge that it's worthwhile spending the time looking through that detail and making sure it's correct. Monitor what's happening. So monitor the invoices, monitor the charges, monitor the chargebacks, and make sure you're tracking all of those so that you really understand where it is. You shouldn't be going, I don't know what I'm leaking out the back end of my Amazon business, because it will be a big number. So you need to find a way, either through customer service, either through the finance team, either through your Amazon team, to really understand what is going on. Because once you understand what's going on, actually, you can then start to talk about and fix the root cause of the problems. A lot of times I see people fix the symptom. Amazon have given me a chargeback. I now need to go and figure out why this is happening. Yes, I'll make sure I do it on this delivery or for the next 2 or 3 deliveries. It needs to go all the way back to actually, how are you getting this product produced? How is it being stored in your warehouse? What's your labeling process? What's your pick, pack and ship process? What tech are you using? There's lots of tech out there in the market today that can really help you drive efficiencies, and that must be done. So I really encourage people to go identify the root cause. Okay, it may be painful, particularly when you start digging around customer service, finance, or supply chain, but really understand what that process of when Amazon are placing that order for it going out the door to being delivered into the FC, to then address the root cause. and constantly do that and make this part of your process so that you're constantly driving continuous improvement in your operational efficiency. As Amazon change, you also need to change, become more efficient as well, because there's wins for you on that side as well as Amazon. And the more efficient you can make it, actually, the more performance you're going to get out of your account ultimately. So fix the root cause. Don't just fix a symptom of the problem.
Great shout out. I think when we talked about this webinar, I can't remember who it was plus one of you guys said this is the least sexy webinar we've done, because you're starting to get into like the back end and the not exciting parts of Amazon. But dare I say, to me it is the more exciting side of things. You know, people focus very much on how we're growing, how we're taking market share, new product development, when actually sat behind the scenes, you've got an entire operation that's receiving POs, moving stock into Amazon. And if you get that bit fundamentally wrong, as you can see here, you're leaking 2, 3, 4, up to 5%. I would argue this is probably it depends on how you're wired, doesn't it? But this is probably the more sexy stuff when it comes to making an Amazon business successful, but it's often missed.
Yeah, well, you think about how hard it is to get a cost price increase through on Amazon, and you can fight tooth and nail for a 2 to 5% cost price increase. But if you can go and save 2-3% in the back end by improving your process, tech support, making sure you really iron out any kind of issues in that pick, pack and ship process, labeling process, then it's a real win for many vendors.
Yeah, I think what stands out for me here as well is it's not sexy, it's logistics, it's operations, but it's about doing the basics really well and making sure that you're all over your EAN information, your carton information, as Ant's already said. And it needs doing. It's work that needs doing continuously, and you've got to do it. And if you don't, you can lose a lot of money very fast.
Yeah. The scary thing for me is you say you can lose a lot of money. There's still a number of brands that we speak to that don't realise they're losing money. They see this as a cost of doing business. And when you start to delve into it in this way, it does turn it into a different conversation. You know, there is, I'll come to this in my next couple of slides, there is some serious money being left on the table. I promised at the beginning that we hadn't just used a hook of 150 grand to get people on the webinar, and I'll explain on the next couple of slides where that has come from. We're only a few slides away actually from getting onto Q&As. We've got a comment that's coming from Chris. Drew, you've got a question in there. If anybody else has questions, please do fire those into the questions tab, and we'll be getting to those in a couple of minutes' time. So where we are now, obviously, Matt, great job of explaining kind of what are the penalties, the various penalty types, why do they happen, what can you do to prevent it? And what I'd like to just go through now is a couple of slides on how do you get that cash back, and how can you, one, get a good chunk of cash back up front, and two, do something that prevents big chunks of cash leaking in the future, which of course is covered when Ant, make sure you plug all those gaps in the back end. But let me take you through the kind of service that we have as a business. At VentureForge, we've got an automated recovery solution that for any vendor can analyse, audit and recover any unwarranted deductions going back up to 2, sometimes up to 3 years. So we can do that full look back and look at a vendor account, look at where you've been charged, overcharged across shortages, overbillings, etc., and really break that down and show you where you can go back to Amazon to get cash back. And this is something we did, actually a client that you were working with, Matt, just in the last couple of weeks, where from our initial audit, we've identified north of £150,000 of cash recovery that's available from Amazon. I won't share too much on the client, clearly that's confidential, but there was about 55 grand of that sat in overbillings, and there was north of 111 sat in shortages. The overbillings is more guaranteed. We've got such a huge amount of confidence behind that overbillings number because the audit process and why those charges are levied. We've got a high degree of confidence of getting the entirety of that 55 grand back for that particular client. And that will likely take us maybe another 4 to 8 weeks to get that cash back. On the shortages side of things, a bit more of a complex process. You're going to have to verify that those shortages were shortages. But in many instances, Amazon will come back and offer against that and say, look, we believe we owe you, or you think we owe you 111. Will you take 80 to settle and save an ongoing dispute? So there's quite an interesting process goes on behind the scenes. But that's where this whole webinar came to life, and we brought that back for a client, and that was a client who had no idea that they were sat on potentially 150, maybe even more back from Amazon. Many vendors are in that position, and this is it's a recognizable brand, but it's not a huge multinational conglomerate. This is a good everyday vendor account that's been running a very good business. So a good level of cashback recovery that can be brought back into their business very easily. I'll say our solution will audit the accounts for the last 2 years and identify potential recoveries, but also repeat that on an ongoing quarterly basis. So we can make sure we constantly mop up any extra penalties, shortages, chargebacks that have dropped in each quarter. Now, of course, you kind of heard Ant's advice. The whole principle of this is let's stop that happening in the first place. But for me, if we get the first cashback, identify why there's been problems, fix the problems, still leaving a solution in place just to mop up the little bits that are left is not a bad move, because something will still leak no matter how efficient you try to be. But with our service, we'll then raise and manage all of those disputes directly with Amazon on your behalf, recover the cash back into your business, and we do that on a no-win, no-fee, zero-risk model. So we only bill our clients a percentage of what we recover, and we only bill that when the cash is back in their bank account. So it's a true no-win, no-fee. Somebody I was speaking to this morning said it sounds a little bit like a PPI salesman selling this service, but there's probably no better phrase to describe it than no-win, no-fee. And we're typically recovering about 1 to 3% of total revenue back from Amazon on a typical client. In terms of recovery, it's a very, very fast process. It takes us about a week to integrate our platform into your Amazon account. That then pulls all of your data, completes an audit in the background, and breaks out the different penalties into their areas and presents back to us and to you where the opportunity might be. Subject to you saying, yes, let's go ahead and recover that, and we're happy and we think that's valid. Cash recovery process typically starts about 4 weeks later, with cash coming back into clients typically from about week 8 onwards. We've had some good settlements at week 8, some have been around week 10 to week 12. This all becomes a little bit nuanced based on your business, your situation, and what we're going after. But it is a very, very fast process. And if you're at a point in a business where you're asking, how am I going to invest in growth? I'm needing working capital. This is a very, very efficient process that can help drive cash back into a vendor business. And very unusual to get cash back from the Amazon direction rather than cash going in their direction. So it's well worth exploring. So I'll say that was an overview of our service. Hopefully what you've learned from Matt and myself in the slides that I took you through was a bit more about where Amazon will be taking cash from your business and why and how you can prevent and get that back. We have seen a few more questions come in, so I think, yep, it's exactly that time. So ready to take some audience questions. Let's have a quick look through the list. Great, we've got, let's pick one here. We've got a few that have been emailed in as well in the background. Let's pick one from Ardit. Ardit, I hope I pronounced your name correctly there. Your question is, we ship via Amazon Freight, and our biggest loss is via on-time non-compliance, basically late deliveries, caused by Amazon's own warehouses being temporarily closed to peak season. Can we avoid being penalised if we are shipping on time? Any volunteers? Or shall I take that one?
Yeah, I don't mind. I don't mind taking that one. So you can absolutely, if it's particular FCs that are causing the problem, you can try and speak to your AVS or your vendor manager to try and divert orders away from that particular FC. I would absolutely challenge every penalty coming through for late deliveries via Amazon Freight if it's caused by Amazon, and I would be kicking that back up to the VM to be able to go, look, we're being charged for this, but we're following all the correct process. So I think keep a track of all of the details that are in place, and definitely track the value and of all the charges, and make sure that finds its way back to the AVS or to the vendor manager for that to be turned around, because that would not be acceptable based on that question.
Yeah, I think that's, I mean, you do a lovely job of simplifying the Amazon world. You're selling something to Amazon, you agree to sell them something for a price, you ship it in. To be penalised for something where you are doing everything you can and you are technically being compliant, they're closing the entry into that warehouse. This to me is fully appealable and should be something you absolutely push as hard as you can do. And I think
and most of these are all automated.
Yes.
It's and this is the problem, because it's a machine. You go into an automated system that picks up that it was late without any kind of history, backdrop as to why. So absolutely, this is why you need to track all of these chargebacks and really push back on them if you believe that they are incorrect, and hold the VM or the AVS accountable.
Absolutely. Thank you, Ant. I'm going to take a similar but different question from Drew. Drew ships in via Amazon Global Logistics from China, and Amazon lost about a quarter of his units between the UK port and the Amazon warehouse. He's been struggling for 3 months to get Amazon to admit that they've lost the stock. Please help. Please help normally follows most questions we get actually when we're dealing with Amazon. My personal view on that is I think that's a little bit more nuanced as to where the loss has actually happened. I think this is going to be a bit more complicated to try and chase down, Drew, because you've technically got two relationships here. You've got Amazon Global Logistics doing your shipping into country, and you've got Amazon vendor, let's call them, receiving your goods into the warehouse. And I see your challenge here being to prove where those goods were lost. Was it with Global Logistics getting it to the warehouse door, or was it with vendor receiving the goods into the warehouse? If it's in the second part, absolutely that's reclaimable, and we can take that through our service. We would require a proof of delivery, which probably comes back to answer the first part, to prove that the goods got to the warehouse door in the first instance. So my advice would be to split your thought process into two. Did Global Logistics get it to the warehouse door, and can they prove that? If they can't, the claim sits against them, and that will be direct with them. If they did get it to the warehouse door and they can prove that, then your claim would be against Amazon vendor, and that would be a very valid claim that you could see through. Matt, anything else to add to that?
Nothing really to add from my side. I think it's that key point of proving where the goods were actually lost and documenting as much as you can as possible and building a case and being quite relentless with it, to be honest. I'd say that's probably consistent across a lot of these questions. It's about tracking, being relentless, and being really in the detail.
Yeah, and I think that's where a lot of brands, I think give up is the wrong phrase, but kind of ease off on this, because it does take a lot of time to get cash back from Amazon, and it can be quite drawn out. I know there's a client where we've been working on that where they believed they were doing cashback recovery, but they're only recovering something like 25% because of the amount of time and effort it took. They walked away from it. It's that doggedness and that determination. Certainly applies here.
Well, if you have a manual process to do all the tracking, all the appeals and everything, it's how much time have you got and what's the scale. It's very, very difficult to stay on top of it manually. Absolutely. So I'm trying to treat these questions in kind of who's got the most upvotes. We've got another one coming in from Adit again. We noticed that sometimes Amazon misallocates inbound goods to incorrect POs despite using AMA ZCC labels. Not a question as such there, but has anybody got any experience of that happening and any advice they could give?
So I've experienced this. So how the Amazon booking in receipt or receipt process works is they can receipt stock on multiple POs, which is why you then see chargebacks come through about 60 days shortages come through about 60 days after the product has been received, and so they let you know just in time that they're not going to pay the invoice, which is always handy. But yeah, Amazon can book it in on whatever PO they want to make sure that they're accounting for the stock. But you will see on some POs they'll accept more, and then some POs they'll accept less. But over the 60 days, that will generally right itself, and then anything that doesn't then becomes a shortage that they don't pay. So you won't stop that from Amazon. That's just part of their process. I've gone round and round in circles with Amazon on this. It's just how they do it, frustratingly.
And that's why you're our vendor expert in residence, Ant. Thank you for taking that one.
No worries.
So I was just going to add to that point as well. As Ant said, over the 60 days, even if they're booking the stock against different POs, not necessarily the correct one, as long as you're getting paid for the full amount of units, that's okay. But in the past, I've done things where you search by racing in PO history and you can see where they've literally booked stock against a closed PO. So as long as you've got visibility on where that stock's been booked and you've been paid for the full amount, it's in theory not a massive issue, but it's just making sure you are getting paid.
Yep.
Yeah. Brilliant. Thank you, Matt. Moving on to the next question, a question that's come in from Anurada. How are these issues linked to brand reputation? As I've been reading this, my instinct was it's not, but I think there are because this is fundamentally back-end operation. It's operational penalties from Amazon for not complying with the way they want you to work when inbounding goods typically. However, I can see knock-on impacts here, because if you're receiving penalties, shortage claims, it's likely to have some correlation to your likelihood of being out of stock. And that's possibly the only link I can see here, is if you're not efficient getting goods in, or you're non-compliant getting goods in, there's a chance that stock might not make it through. You could be out of stock to the consumer, and there might be brand impact there. But I would say fundamentally, this is a back of house operational issue, not really a brand reputational one.
Yeah, you're likely to see this come up more in your operational dashboard on Vendor Central, where they'll be highlighting vendor lead time, or it could be chargebacks or shortages. You'll be able to track all of this in the background. If it becomes an ongoing issue and it goes over certain thresholds and doesn't hit KPIs that are a part of your vendor improvement plan, it may then find its way into your QBRs, or possibly even your AVN, in terms of some kind of financial implication to try and encourage you to fix it. But you've really got to kind of ignore everything that Amazon are doing. In that case, you would be hemorrhaging just cash through the door if you just chose not to engage with it. Also, I've not seen it, but you've got to assume, as you've mentioned, Andrew, that if you choose not to operate how Amazon want to operate, and you don't want to follow their guidelines, I don't think there should be any surprises that maybe the POs would slow, because Amazon wouldn't want to order from you, because you're slowing them down, because you're impacting their customer experience. So I think there's probably a little bit of a watch out there, kind of ignore at your own peril, I guess, but you need to make that call as a business.
Brilliant. Thank you, Ant. Whitney's done a great job. We've had some questions emailed in before the webinar that she's now popped into the Q&A panel for us. Really interesting question. I'm interested to hear how you got, Matt. I can see your smile already. Should my vendor manager be helping me to do this as in get my cash back?
So my answer to that would be you only ever contact your vendor manager with anything to do with this as a major escalation point. They can support you with different operational programs that Amazon run to try and improve your processes. But I think ultimately the responsibility is with the brand to own their processes, understand what Amazon expect from them, and comply with them, basically. But I'd only ever be contacting a vendor manager if I'd had a massive shortage or a massive fine where I knew it was incorrect and I needed a point of escalation, to be honest. But yeah, they can support you, but the message is you should take responsibility as a brand about owning the processes.
Yeah, I think if you think about why a lot of these penalties exist, is to push you to comply. So I can see where the vendor manager has got a motivation to help you comply, but on the flip side, categorically, they've got no role in proactively helping you get the cash back from Amazon. That's not their role. They want you to comply. They want you to run an efficient, well-operated vendor business. But in my experience, and certainly in my opinion, there's no vested interest from a vendor manager to help you get to cash back.
Just a bit of a build on that. What they can do is, if you've got a value of chargebacks or shortages that you're going, I've got 40 grand that I don't believe is fair, and you can demonstrate that actually you've followed the process and you've done everything that Amazon have asked, I would absolutely be wheeling that out to the AVN or to the AVS or the vendor manager to go, right, I've now got an issue which is 30k, which I now need to be escalated back into their FinOps team. So the vendor manager will be able to push it back up to their financial operations team, who do a deep dive and root cause analysis on that data. So if you're struggling to understand what's going wrong at Amazon's FC when you're trying to fix the problem, you can get the vendor manager to facilitate that relationship with the FinOps team, who will go in and they will pull it all apart. They will track it to go, okay, this is happening on this particular order. This is how it's booked in. This is how it is distributed. This is where it's stored. And they'll tell you what that issue is. So I've gone through that process a number of times, and the FinOps team do get pretty granular. But ultimately, we're going through that process to find out what the problem is, but also get a resolution on the money that should be owed back. And sometimes you can get half of it. You might be able to get a little bit more, but there will be a financial benefit of doing it. But this is why you need to track the detail and understand what the size of that hole is, because then you've got a number that you can wheel out or take the detail to the VM during your discussions and QBRs, etc.
Fantastic. Thank you, Ant. Very straight one, Matt. I think this might be an easy one for you to pick up. How is the cash refunded? Is it delivered by Prime to the doorstep, or how does it work?
So once you've gone through the dispute process, disputed the shortages or any chargebacks over billings, the cash is just paid back into your Amazon or the bank account linked to your Amazon account. So it should just pay back into your Amazon account. And then on the back of that, there'll be an invoice from us for the commission that we take.
Fantastic. Thank you, Matt. Next question. Do you need to be a certain size Amazon vendor to do this? No is the short answer, but the bigger you are, clearly it's almost, it's a percentage of your turnover gets lost here. The bigger you are, the more you'll have to go back for, but this can work for any sized Amazon vendor. It normally gets interesting when you've got north of £1 million turnover, which, to be fair, applies to pretty much most vendors anyway.
Yeah, I'd say as well for smaller vendors in the Amazon vendor world, it's a good opportunity at the start of your journey to understand if you've got any operational issues. So are you leaking a lot of money through chargebacks and shortages? It's actually quite a good opportunity to understand what your position is and then take the next steps to address them so you don't have them as you scale out over time.
Great point, Mark. Great point. I think actually Bradley's going to talk a bit more about making sure you've built the right Amazon business from the ground up. If you're a small Amazon business losing a high percentage of turnover, there's some real fundamental issues that you want to fix before you scale from that point. Otherwise, the level of cash loss will just scale alongside your turnover. Picking through the question, we've got a lot of emailed in ones from Whitney, making sure we're not missing any of us that are coming in as we're talking. Let's have a quick look. There we are. Take one that we've had emailed in. How do I know if we are compliant with all of Amazon's operational guidelines to avoid unnecessary penalties? So kind of building on from that, how do we know in the first instance if you're doing things the right way? How can a brand make sure that they're compliant?
Well, go on, Matt.
I was going to say, if you go into the operational dashboard in VC, you'll be able to filter by week, month, even up to year about if you've actually been charged. So that's how you'll know if you're compliant or not. Also, I would suggest looking through the vendor manual and looking at all the different processes and requirements and ensuring that your warehouse is aligned to those.
Yeah, and the only build on that, Matt, is any new requirements that come through from Amazon that are potentially there to be chargeable or penalised if you don't follow them. Amazon tend to give you a grace period on that. It could be anywhere between 3 and 6 months so that you have time to get your operational process in place so you can track the chargebacks that are coming through there. But obviously, there's no cost there. So it's worthwhile. These emails that come out from Amazon advising of changes, it's worthwhile following those very closely to make sure that you're not caught out.
Yeah, I think the key thing for me there is that vendor manual. Make sure you read it. So many brands get hung up on selling on Amazon and not operating on Amazon. Get that front and center, read it, understand it, and make sure you comply with it right from the outset. And you shouldn't have any of these issues if you're following that to the letter. If only it was that simple.
Big read as well, to be fair.
Brilliant. Okay, I'm going to take two more questions, and then we'll move on to the last couple of slides that we promised that we'd come on to. A couple of questions. I think these are both relating to our service. How do I submit a claim for reimbursement and resolving disputes with Amazon? Simple answer from our side is you don't. We will do that all on your behalf as part of our service. We'll identify the cashback opportunity. We will raise the cases. We will chase them through. We will drive the cash back. That's exactly what we do as a service. And we will make sure that they get pushed through Amazon on your behalf. So there's nothing for you to do as a brand if we're working with you. And then the final one that I was going to take here, would Amazon ever deny our chargeback claims, and how do we avoid this happening? Matt, any thoughts? Ant, any thoughts? I've got a few, but see if you guys want to chip in.
Well, I think the main thing is establishing whether the chargeback is valid or not. Amazon would 100% deny the request for a waive on the chargeback if it was legitimate. Yeah.
I think for me, it's building a strong, credible argument and submitting a strong, credible case. I think if you were to go back and say, I've got 100 grand of shortages and this partner of mine's told me it's the case, or this tech has told me it's the case, can I have my cash back? It's not going to happen. But backing that up with proof of delivery, clear documentation, a well-written case, and having the expertise of having done this with Amazon numerous times, if you approach it in the right way with the right evidence and build a strong case, your chances of success go up. And where we've seen Amazon come back and offer a bulk settlement and say, look, you're saying we owe you 100 grand, we'll give you 80 if you don't go through a long drawn out process. We've almost always got to that quicker settlement by having big case, strong evidence that really kind of fights our corner. So I think, yeah, strong evidence, strong case, well articulated, and experience of having submitted this kind of stuff in the past and knowing what does and doesn't float the boat of the team that you're dealing with on the other side of things. Okay, apologies to those people whose question I haven't got to. I do believe everything I've missed is just, or skipped, is just the emailed in ones which we can follow up on afterwards. Before we wrap up and thank everybody for today, we have got an offer for anybody who's joined the webinar and puts up with our slide reading and our conversation about the non-sexy part of Amazon for the last 45 minutes. At Venture Forge, we operate this on a no-win, no-fee basis, where we charge you a 20% of any cash that we recover. And upfront, we charge typically a setup fee of £1,500. As a thank you for sitting through the webinar and to help us to help more brands get cash back from Amazon, we're going to drop that to half price for anybody who's attended the webinar that starts a project with us by the 30th of June. So a very straightforward offer. To get the chargeback project up and running would just be a £750 one-off setup fee. We'd handle that entire process for you on your behalf. If there's any interest in that, please just drop us a line at hello@ventureforge.co.uk and we'll pick up the conversation from there and help you get some, hopefully, quite significant cash back from Amazon. For the client that we got £150,000 back for, the setup fee was just 1,500 quid. So there's actually a really good level of ROI on this kind of project with us as well. And that's it from us. I think, as I say, the final things I'd like to do, Ant, Matt, thank you very much as always for giving your time and joining us. Unfortunately, I'll say the audience is much more important than you two guys, and a huge thanks to the people that have given up an hour of their afternoon straight after lunch to come and join us and hear about the non-sexy part of Amazon. But hopefully what I think we should have all taken for this is there's some cash back there, and it's the non-sexy stuff that matters, and this can make a real difference to your Amazon business. So thank you very much for joining us. If you do have any interest in finding out more, please just drop us a line and we'll pick up a conversation with you after this. Hope you all have a great afternoon. Thank you.
Cheers, everyone.
Thank you.
Thanks.
Bye-bye.